Hi, thank you for clicking this video because this video is promoting about the credit insurance facilities which are offered by the EXIM Bank. So, what is an EXIM Bank? EXIM Bank is an export-import bank of Malaysia Berhad which was incorporated on 29 August 1995, which are only owned by the Malaysia Ministry of Finance. The function of the EXIM Bank is as the preferred trade financer of global businesses which offer in terms of trade financing, credit insurance and also advisory advice. As for the credit insurance, it is an insurance policy that covers non-payment resulting from the delivery of goods or services due to the commercial and political risks. The insurance is purchased by the business entities to ensure that their account receivable from loss due to the insolvency of the overseas buyer. So basically, credit insurance facilities are divided into two main terms, which are in short-term insurance and long-term insurance. Practically, this video will more emphasize in towards of long-term credit insurance facilities, which are the political risk insurance, buyer credit guarantee, and lastly the bond risk insurance, which will be explained by Farah, HAQIM, and NADIA. Stay tuned and enjoy.
Hello, I am Farah and I'll be the first presenter for this video presentation, which I'll be explaining about the political risk insurance. Political risk insurance is a facility under EXIM Bank that is offered for the long-term investment, which is a facility that acts as a financial protection for the businesses, investors, financial institutions in case they lose money due to the political events. This also protects against the possibility for the government to take some action that will cause the insured to experience a large amount of financial loss. The instrument type for this political risk insurance is either insurance or takaful, and for the maximum tenure is 15 years. Meanwhile, for the amount that will be covered from the losses is up to 19% of the losses that has happened. So next, we are going to do what type of risk that will be covered by the political risk insurance. Therefore, which is the first one is the transfer restriction, the second one is expropriation, the third one is war and civil disturbance, and the last one is breach of contract. The only eligible investments customers and projects are Malaysian companies or contractors, as well as Malaysian investors raising funds overseas. Meanwhile, private sector companies are the only eligible beneficiaries, lenders, or financiers. There are 4 eligible forms of investment equity. What are they? There are shareholder advances, shareholder guarantee, commercial bank loans or financing, and also movable asset. Political risks are inherently difficult to predict, and past events are not reliable indicators of what will happen in the future. While investing in developing markets can offer attractive new revenue and margin opportunities, it can also present a variety of political risks that are beyond an investor's control and can quickly leave them facing loss.
Okay, my name is FARHAN FIRDAUS HAQIM and my part is bond risk insurance. Okay, what is this product about? Bond risk insurance is an insurance coverage extended to a contractor who is required to provide surety bond to its principal or contract awarder when undertaking a project overseas, who is concerned that such bond is unfairly called by the principal during the validity period of the surety bond. The coverage covers any fair calling made by the principal on the bond as a result of the occurrence of political events in the country where the project is located that deters the contractor to continue performing its duty as outlined in the contract agreement. And then, what is the percentage of indemnity? Okay, up to 90% of the amount of loss suffered by the policyholder. And then the tenure for the product is up to 5 years. And then the premium rates primarily depend on EXIM Bank's grading of the market with which the business is done on end terms of payment. In general, the premium is dependent on market risk and credit terms. Processing fee of 1% on the insured amount, subject to minimum of 1,000 and the maximum is 20,000. Should the insured amount be in foreign currency, the fee will be applied accordingly in foreign currency be equivalent to RM 1,000 and maximum be RM 20,000. For example, Malaysian companies have secured projects from overseas, such as Dubai. The Malaysian company has awarded the project to the company A, and then company A wants to run a project overseas. It's not easy. There will definitely be risks, including political risk, economic risk, and others. It could be that when the work is half done and then the project is cancelled for some reason. That it may be that company A is unable to pay the losses of the Malaysian company because it has bankrupt. So, bond risk insurance is to cover that risk that require. So, EXIM Bank can provide protection to Malaysian companies that are undertaking projects abroad. EXIM Bank will pay up to 90%. Like I say just now, coverage is 90% to the company or the policy holder. Okay, that's all for the bond risk insurance, and then can continue the video to the next subtopic. Please enjoy it.
Okay, now I will proceed for the buyer credit insurance, or we can call as a buyer credit guarantee. So this facility is worked by if the exporter fails to perform under the contract that is increase the risk that the buyer will not service or repay for the financing facility granted by the lender. So EXIM Bank will be liable to pay the bank for any buyer default. However, it's not intended that EXIM Bank should suffer the loss where the exporter is in breach of the term of his contract or the premium agreement. EXIM Bank therefore have the ability to seek action from the exporter, which means EXIM Bank can recover some or all of the money it paid to the lending bank from the exporter. For that, the EXIM Bank must be confident that the exporter will be able to fulfill any recourse demand that may arise. The exporter recourse obligation may be required to join the lending bank. So what is the criteria that need to enter in these facilities? So to be eligible for EXIM Bank Buyer Credit Guarantee Program, they must be meet these criteria. So the first criteria is the loss must be supported by a cash contract worth at least 2 million or its equivalent in another currency. Second, the credit or payback duration must be appropriate to the contract in the concern, with a minimum of 2 years and a maximum of 15 years. And third is the lending bank can finance up to 85% of the contract value, with the balance paid directly to the exporter as a down payment before to the credit period starting. However, for the public buyer, 100% financing is allowed. Fourth is a minimum of 13% Malaysia content in the form of goods and service must be included in the commercial contract. So that's all for the buyer credit insurance.
Hope you all understand quite well towards the long-term credit insurance facilities and can be used in your business in the future later. Thank you. That's all from us. See you in the next video.